So, ladies and gentlemen, today we should talk about how currencies, golds are related to each other, and also at the same time we will walk through the road what was taken by the different European countries until they realized that they should introduce the single currency, the euro, because they tried all the possible approaches, all the alternates, and it was always ending badly for them. So that's why this is quite a straightforward approach. So that's why first we have to start to talk about gold. So why it's good? Okay, it's not oxidating, so it's one thing, and it's also relatively rare. But this rarity, still we can see that nearly 200,000 tons of gold are already extracted from this planet, and we are using it in different forms. Also, we can see that, yeah, we know that 50,000 tons are the known reserve, but it doesn't mean that that's all what we have. It means that right now these are the proven reserves, and if we would extract them, we would find also some other tonnage here and there. Just in this case, you have to spend the money for finding these reserves. But key feature of gold or any mined resource which are rare, that usually their mining doesn't scale up so much. Especially in this case where you are not using it for industrial. Okay, sometimes you are using it in industrial purposes, but the purpose of the metal is not for to use in the manufacturing process in huge scales. So that's why usually their growth trend follows the like trend. Also, what we can see here that only a smaller percentage, so 17% of all the gold on the planet is owned by central banks. So mostly it's like ring like this, okay, like this precious, what we can see here, but also coin and bar at private investors or at the exchange traded funds are the main major investors. So practically central banks are much more like market makers or investors here, and they are not a key competitor. Maybe because they are significant in terms of in the individual market share, we can say that, okay, if they are buying and selling something, then they can have price impact, but we cannot say that half of the market is dominated by them. Just still a significant part. Okay, gold is always considered as a safe haven asset. So if there is any change in market sentiment, so if market sentiment about risk exposure increases, if they starting to become, or investors starting to be afraid of inflation, or they are starting to become afraid of partner risk on the bond market, then usually gold prices are increasing. Some people says, and also the literature and textbooks, that it's a risk-free like asset. Similarly as a treasury bill, so short-term government bond which are AAA rated. AAA rated short-term treasury bills, which is okay, nice, but still treasury bills are at least paying some kind of interest, or at least we can calculate interest payment from them because they don't have predefined interest rate, but still the pair value and the market price difference can be transformed to an interest rate. So also CEP and beta supposed to be 0, but if you are checking the empirical data, then again this will be a bit different. So in textbook we can find many things, romantic ideas about this, but yeah, please be careful. with that one because this should have systemic risk, this should have all the other risks, because this is just an ordinary commodity which is respectable, but still a commodity. Okay, in the case of monetary policy, this is considered as a central bank asset, so it's on the asset side of the balance sheet, which means that it should be financed some kind of a liability. So the easiest thing is that let's issue some money as a central bank, and after that we can purchase this gold. And in this case we can do it from domestic currency. So if we are building foreign exchange reserves, on the liability side we need some kind of foreign exchange denominated liability, except if we are defending our currency against appreciation. In this case also we can finance it through domestic currency, but otherwise gold can be purchased for our domestic currency, or we can purchase it from by investing some of the commercial bank deposits. Just the problem is that we have to pay interest on the commercial bank deposit, and in this case we will lose some money, so it will generate us expenditures. So that's why gold reserve creation became really popular during the late 2000s, then during the 2010s and nowadays at central banks, because AAA rated bonds, they were not paying anything at all, so the yields were zero, sometimes negative. So in this case, buying or keeping gold became much more reasonable. When we will talk about international reserves and gold reserves in general later on during the third or second half of the semester, we will talk about it in much more details, because even until 2008, central banks were selling their gold reserves. So gold price were stagnating, declining for 1.5 decades. So practically right now this is a new trend that central banks are buying gold as an asset instead of getting rid of it. What happened since the 80s, but still we cannot say that some central banks will bring back gold standard. Because financing gold, financing money with gold would be a terrible idea. So this is quite a unique data set what we can see here, because Bank of England created this really long data set in 2017, and in this case they collected many data. Just I collected the headline macro financial data sets. So they estimated GDP, the output data, they estimated consumer price index data, they estimated money in circulation, and also once they had publicly available interest rate data, and also foreign exchange rates. So the time series are starting in 1080, but meaningful data was only available after 1272, which is quite rare. So unfortunately, in Central Europe it doesn't have anything, because we have so many different world wars and we have to rebuild the country once in a century. But in the UK they have everything. So they have really good long time series. Even from the 100 years war with France, still they have the registers that which mercenary was paid where in France. So yeah, they have really good data sets, so that's why we can test the hypothesis that does gold has any meaningful purpose. So in a monetary policy and macro finance, the objective is to minimize the volatility of the different macroeconomic variables. So when central banks are looking for objectives, when they are calibrating their instruments, the objective is always to minimize the volatility of the GDP, of employment, of the inflation, and so on. So what we can see in the first three lines at least. And what we can see here that, okay, during high medieval periods, there were plagues, there were wars, there were many, many nasty things. And still we can see that, okay, volatility was naturally higher. So, because in this case you can see the standard deviation of the data. And after that, still, if we are focusing on the early modern period, we can see this 8% volatility. During the first industrial revolution, still it was around 6%, and then it went down during the gold standard to 4%, but these are still way higher than what we can now see nowadays without gold. So still we can see that, okay, Bretton Woods system contains some gold because in paper, US dollar could be converted to gold at a defined rate, but only for central banks, and nobody did this. Once countries started to ask for their gold, then it was abandoned. So what we can see here that gold created many frictions in the system. So we can see that, but it stabilizes the exchange rates. We have this benefit. Just the problem is that, yes, in this case we have to sacrifice everything else in the economic stability. So this is the first issue. And after that, we should go through the different time periods and identify that how gold can serve or how can gold hinder the economy. So, first of all, which economy can be suitable for gold currency? And in this case, we could put here not just gold currency, but also cryptos to the game. So, doesn't matter that if we have just a finite amount of commodities to back our currency, it can be gold, crypto, whatever. The problem will be still the same. That if this the quantity of this commodity, it doesn't follow the growth of the economy. So if the economy is growing at an exponential trend, and we cannot follow this one with our commodity here, then we are facing trouble, so we will create a nice deflation. The Bank of England tried this and had this after the Napoleonic War, when I think Ricardo had a great idea to link completely the issuance of British pounds to gold reserves, and after that they abandoned it after 1.5 years because they realized that it did not end it well. So the problem is that if we are pursuing this, then we will sacrifice many of our economic growth. So if we have really simple economics with really simple relationships between households, companies, if we have really narrow banking system, financial system, and non-existing state, at least modern state, then we can build something like this because it will be really robust, really simple, but maybe we don't want to live in this one, because what happens here that the output per capita ratio will stagnate. So practically our living standards will not improving at all, which is bad for us. So we don't will not enjoy it, and also productivity growth as a result will be also stagnating. So we can build an economy which can run on gold or crypto, just the problem will be that we don't want to have this. Yeah, so let's test. So this is where I'm supposed to talk about why history or economic history can be useful for us. Because in this case, if you are checking economic history data, at least we can validate or test different ideas. So I mentioned already these things that maybe this is not the brightest form of running an economy, but in this case we have several century-long data to see that is it actual. So we can test back if we have proper data set. And unfortunately, people who had to live in this 5 centuries, they were not that happy in terms of living standards. So the problem is that we can find many cases during human history when there was some kind of a high civilization with high urbanization, in this case the Romans, with 20% urbanization in population. In this case, that was a monetized economy, so they were using money, they were using some kind of lending system, they had continent-wise trade routes, so people, goods, and money was flowing around the different parts of the continent. So, for example, we can find evidence for moving fish souls from modern-day Tunisia to the British continent. And problem is that it can deteriorate really fast. Okay, the Roman Empire was never the pinnacle of political stability, so it was always, it's way harder to find a state when it was stable politically and there were no usurpation, no internal war, no external war or something like this. So it was always really close to collapse. So the surprise that it was surviving such a long time period, but when they were collapsing, that was quite disastrous because already it was not existing just on paper for 100 years already during the 500s, but in this case they were able to combine the extreme weather events, the Justinian plague, the Gothic Byzantine wars, and what happened that 60% of the population was lost. So the same Justinian plague, I mean the plague was the same, the bubonic plague was the same, but which came back during the medieval time periods, with also similar loss ratio in terms of population. But the problem was that many things happened so fast that, that practically markets disappeared, cities were decreasing to ridiculous levels. So Paris had 20,000 people, so it's like a district in Szeged. So, and also internal markets disappeared. So before of that, there was a division of labor between villages, rural towns and bigger cities. Now it disappeared completely, and within a lifetime of people, at least who survived, everything went back from a market-based economy to surviving mode. So even in the year 1000, the whole European GDP, according to the Angus Madison database, but just 4% or 5% of share was globally, I mean in Europe, from the global GDP. So at the same time in India and in China it was around 25%. So, and this will be stable until the Industrial Revolution. So also the population was absolutely stagnant. So nowadays we are around 800 million people in Europe. At that time, they were just 40 million people. So it's really low population density. And also they were just trying not to starve to death because also at the same time, grain yields were terrible. So that was also the reason. So that's why they did not have proper population centers. That's why aggregated demand did not concentrate it. And that's why they did not have even proper state or money at all. So there was a huge external imbalance because mostly they did not have products to be sold. So there was a constant inflow of luxuries from India or Chinese direction, but practically they had to pay with metals, precious metals. And if we are checking the map, then we can identify the following trade areas, which will be connected in different ways during the different time periods. So, if you are going to the high medieval period by following these two nice and excellent books, then what happened that finally grain yields were increasing in Europe because they realized how to run proper agriculture. So there was a sudden surplus in population. That's why 10% of the population became urbanized again, which is a big thing. So for example, Paris went back to 100,000 people, which compared to China or the Americas, at this time it was a rural town or whatever. But here in continental Europe, that was a big thing, and population doubled itself until 40 million. And also what we can see here, that, oh sorry, Paris was even growing faster. So it's bigger than Szeged. But yeah, still small one. And also what happened here, that these regional and inter-regional trade relationships were building themselves up. So there was a division of labor between villages to move food into the population centers move goods back to the villages. So this self-sustenance was disappearing happily and luckily. But in this case, obviously, we need, so if we have any kind of a trade activity, we need some kind of a loan. So we can find many evidence that already these people who were doing these merchant things, that they were moving goods between the different locations, they were never using or never buying everything for cash. So they were already using suppliers lending. Or if they were much more sophisticated, like the Italian city-states or the Low Countries cities, then even they had banks. So they tried to concentrate the capital, the savings, and that's why lending was already provided at reasonable interest rates. Still, we cannot say that we have proper state in this case, so we have many different alternate approaches on continental Europe. So we can find city-states, obviously, where we cannot find any monarchs, or where the states even collapse, like in northern Italy. We can find here, okay, some kind of kings and other noble people who are trying to rule some lands. But the problem is that they started to realize their revenues, their tax revenues, only some part of it in gold or in silver, only in precious metals. So a significant part of it was still realized in commodities, food. So, and based on this, you cannot build up a significant military, you cannot maintain a significant set of individual or independent administration, public administration. So only at the end of the medieval period, what we can see that now these absolute monarchies can be built up. Until then, all the kings and noble people were dependent on each other, and because otherwise they were not able to rule at all. So also public debt. So in case of city-states, since they have much more sophisticated administration, for example, Florence in Italy was able to issue the first sovereign bonds. They wanted to build a road, so they needed money, and that's why at 5% of interest they were selling these bonds, and that was the first time when we can, at least we were able to find evidence for such an activity during medieval times. And these city-states were able to finance themselves cheaper. So if at the same time the French or English king wanted to get a loan to finance his endeavors, so obviously these projects were related to war in many cases, their interest rates were way higher because these loans were linked to the person of the king, not to the kingdom actually. So if the king died in the next battle, then the problem was that after that the next king said that, okay, it was not my debt, so who cares? So in many cases, also collateralized lending was possible. That, okay, as a king you can get this loan, obviously you will die sooner or later because you are stupid, but to get this loan you have to give me this area or the tax revenues from this area, or even in the case of Fuggers, who were providing a lot of money for Habsburgs, and Habsburgs were optimized for inbreeding, marriages, survival, but their skills in terms of economics were in negative degrees. So somehow they survived until the First World War as a dynasty, but not because of their economic knowledge. They went to default every century at least. And so the Fuggers were providing them loans, but only because they get more and more silver mines in Lower Austria, and also they get copper mines also in modern days Slovakia, so in Upper Hungary. And so in this case, collateral was already present as well. So we can find many relatively modern features in this really absolutely simplistic economies as well. But still, this was a really slow and linear growing process. So what we can see here that there was no scaling up or fast scaling up procedure, just population was growing, and that's why economy was growing. So if we are checking the data from the English database, then we can see that this is supposed to be the GDP growth, this blue line, and practically this is declining. So that was the time of the 100 Years' War with France. That was also the Great Plague. Yeah, so this was not the best time period for economic growth. Also, what we can see that consumer price index was still fluctuating. So even if something is backed by gold, still prices will be determined by the availability or lack of goods and also the demand for them. So obviously, if you need something and there was a bad harvest, then food prices were increasing. Doesn't matter that what is behind the currency or the currency itself, because at that time they were using the coinage. Also, what we can see that coin in circulation was increasing and decreasing, so it was absolutely not supporting the economic needs. Whenever they were able to get something, maybe from France or from trade, or from selling woods or exporting wool to the Low Countries in Europe or continental Europe, then they were able to increase the amount of coin in circulation, and then they had war, then it went back down, so it's absolutely terrible. Also, if we are looking for medieval population centers, then we can see this map, so we can see that there were different areas. So, in the case of the English island, we can see just the raw material for textiles. So in this case, they were keeping more and more sheep on the island, and after that, they had to, or merchants had to bring it to London. Then chartered merchants, which had monopoly, they were able to sell this wool in here to the Low Countries, and after that, this is where it was manufactured to textiles and other fancy things and sold everywhere in the continent. Similarly, Italian or North Italian city-states were responsible for long-distance trade, importing luxuries from the Middle East, practically from India and China as well. So that was still really simplified economy, but at least it was much more sophisticated than the absolute zero before. Also, we can see here trade routes, and this is where we have to say that until railroad, most of the trade happened on sea or at least rivers, if you were able to move goods around it. So the problem with continent is always that you cannot move a lot of or huge quantity of bulk goods. So low value, high quantity good transportation will be absolutely limited on the rivers and on the seas. So until then, even if the continent is relatively big, until you are not able to move inside, or explore somehow and bring their goods out, then, for example, in Hungary, they were raising cattle and then moving it to the Central European market. So that was the main export. And also they were mining silver and other precious metals, so it can be also sold on the European market. But this makes economic activity also really, really poor and terrible. So maritime environment was flourishing, or where cities had still good connection to the sea through rivers. But otherwise, continental Europe, especially in Eastern Europe, that's the reason that it was not that active. Also, we have terrible states. So this is the monstrosity of the Holy Roman Empire, which was not holy, not Roman, and not empire at all, because you can see all the different polities. So, yeah. Okay, so let's see the different continents. I absolutely recommend this book written by Valerie Hansen. It was published several years ago, and I read it during the pandemic. And in this case, she was able to describe the different big regions. So if we are checking, when, for example, the Middle East or India or China at this time, these economies were flourishing completely. So also, this is a time period when southern China started to run out of silver coinage, at least, to support the domestic economy. So that's why they had to issue the first paper monies, because otherwise there was a discrepancy between money supply and money demand. Also, the Song Dynasty China, this is when we can see the mass production of porcelain products, and also these porcelain products were not produced for the domestic market. So you can find the same porcelain products in the Middle East, even in Eastern Africa, in the Indian continent. So it was sold everywhere. So we can see huge and really long trade networks. So not just the Silk Road, what is going through Middle Asia, but on the sea again. So what we can see here, that there were many different regions, but practically this environment was already absolutely interlinked together, and also a far distant node was located in Europe, so it was also integrated, just absolutely irrelevant. And also the Vikings were doing their things here in the North Atlantic and also selling slaves to the Middle East. The other interesting thing is the Americas, because also we can see that between the Great Lakes and the Yucatan Peninsula, they had trade routes. So we can find also goods were moving back and forth, because archaeologists were able to dig them up. But there were no trade relations between the Incas, because this area is absolutely still, it's not, we cannot find any highways or anything crossing the jungle because of terrible everything. So it's still covered by jungle, and also ocean currents are not supporting also movements through the sea. So somehow these two parts of Americas became insulated until the Spanish arrived. So, yeah. And then the next question is that what happens if you are adding plague back to the game? So, it came back, and unfortunately we moved again sometimes 1/3, sometimes 2/3 of the population within 1 or 2 months. So in this case, Thanos in the Avengers won at the end when he was doing this. Practically he was still a nice guy, because he was just removing half of the population. In this case, the bubonic plague was unfortunately way more efficient. And what happened here, that and even if the population was bouncing back, it was not able to exceed the 80 million people, because in this case the next plague arrived. So practically it was
capping the population. Also, there was the little ice age, so sometimes there was no summer, or sometimes there were landslides and other things happened. And because of the loss of population, they started to make or grow much more industrial plants. So, like, wool is not a plant, but all these things that you can use for making textile, not lentil. Okay, so whatever. So what we can use to make textile for sales and other products, this is when they start to move in this direction. Also, since workforce dropped significantly, that was the time when many parliaments kept labor wages. Since there was a labor shortage, then practically they tried to maximize wages. And we know that it was not sufficient because also we can find many cases then people had to go to court and they were punished because they paid more for their laborers. And also that was the time when this serfdom ended completely in Western Europe because people were just not, they became tenants. Even if the feudal lord wanted to use their labor, they were not showing up because who cares this guy? And they were paying to use the land, but they did not want to provide any labor anymore. So, to maintain their revenues, also the feudal lords started to make investments into their land. So that was the first or the widespread usage of and build of water and windmills, again to generate additional profit. So it's really interesting that we had the same, literally the same genome and the same plague, and it had completely different impact on the economy. After Rome was falling to pieces, then it created practically a collapse within the economy. In this case, it has a really significant acceleration effect to scale up economy, to scale up productivity, to stabilize practically human rights, so we can see that practically if we are using lower amount of population, then it must be compensated by more investments into capital. So if we are just checking this Cobb-Douglas production function, then we can see that this will be the impact. And also the internal balance was, first of all, merchants had to realize that now they had to operate under way lower margins. So it was also forcing everybody to increase their productivity because their margins were decreasing and kept small for a long time. But also because of people were dying, then people inherited a lot of things. So that's why capital concentration. This is not the this is the unwanted way of capital concentration, but okay, they were able to achieve this in this way. And also that was the time when kings tried to centralize as much power as possible. Okay, in the case of France, during the 100 Years' War, it was quite simple because they were dying in all the battles against the English. So that's why they were removing the elite for so many times until they realized that maybe we need some professional public administrators who are not participating in the battle and they are working full-time on running state business. So this is one way of institutional building, and this is when they were able to come up with. Also, the Habsburg Empire, they were really good in marriages, I mentioned it already, but their problem was that even if they got the Low Countries, which was the richest territory, they got the Spanish, and also they got Austria. Austria was not that rich, but okay, so they got different parts of Europe. But the problem was that they were never able to connect or never able to harmonize any of this. So even if you have revenues in Spain, you cannot use this money to deal with affairs in Austria, or also the Hungarian kingdom as well, or what remained from them. And you cannot use this money in these purposes because there are different laws, there are different legislations, there are different parliaments even, and you are not able to unify these things. In case of the French kingdom, they were able to solidify their power, they were able to build up their absolute monarchy and keep it there for 300 years. But in the case of Habsburgs, it was always ended in disaster. So, if you are checking the Angus Madison database, then we can see that at least the share of world GDP looks like this at the end of high medieval periods, at the beginning of early medieval periods, that still China and India is absolutely dominating world economy, and after that we can find here, let's say, the Ottoman Empire with 2% of share. Here we can see, I think this is Habsburg Empire and Poland all together, 3%, and I mean Austria part of the Habsburg Empire, and this is the remaining France, Spain, and so on. Yeah. So, then the age of exploration happened, which was also, it was not a straightforward procedure, let's say. That first of all, fall of Constantinople happened, but only Venice was kicked out from Constantinople because they were not paying enough money for the Ottoman Empire, and also they did some nasty business. So the rest was able to keep there, but still other entities like Portugal, they started to explore, but practically they were just trying to find where the gold is coming from, because people know that gold is coming mainly from south of Sahara Desert. Even the Romans tried to go there, just everybody died during the procedure. So in this case, they tried to use ships to go around, and after that to create some trade business in this environment, but it was taking decades until they were going there, and then they were able to create some locations, and still they were absolutely up to the support of the local kings and people in the African coast. So in the case of Americas, okay, that was a completely different thing, but they were able to, yeah. So this will be the next thing. So until then I was mentioning that, okay, gold was, let's say, growing, but practically growing and flowing out from the continent. So we can say that, yeah, stable money support was present. In this case, there were huge spikes in the inflow of precious metals. What happens? Obviously, huge price shocks will happen. So, in many cases, when in many cases, first of all, there was an increasing demand for industrial products because people had to build ships. And they were scaling these operations up really fast. So already in 1500, Lisbon had a daily turnover of more than 100 ships. So you need a lot of timber, you need a lot of iron for cannons, you need a lot of textile for all the sails and so on. So you need huge construction capacities. And which means that still at the technological level and level of productivity, these maritime regions started to focus to produce these raw materials required by the, you cannot say industry, but manufacturing. And as a result, food prices started to increase a lot. And if precious metals were flowing in, then these prices were jumping even more. So there was, we cannot say food scarcity, but food prices were high. So that's why in Central Europe starting to focus even more on the food production. Just the problem was that the inside of the continent was not able to export anything, just cattle. That was all. So grain export was only visible in northern Germany and nowadays Poland, but otherwise not. And also, yeah, Habsburgs were able to collect all the loot what was captured from the Americas. So, for example, when conquistadors were hijacking the Incan emperor and they were requesting that the room must be filled or filled up to his height with gold and other precious things. And obviously after that they killed the guy, so they were ruthless and crazy. After that, this money was transferred to Europe. What can you do if you are a Habsburg emperor and you are Charles V? Obviously, you can repay your debt. You can fight or use this money up in the Ottoman wars. Or you can go to the Low Countries and party all this money away within 1 month. So obviously, he was choosing the third one. So it was absolutely inefficient how this money was used up in many cases. So the Spanish economy was never growing. So that was a really interesting thing, because after that, early economists started to study this phenomenon that why Spain is underdeveloped. And this underdevelopment was increasing, especially during the later centuries, even if the money was flowing there literally. Yeah. Okay, so what we can see here that within some centuries, all these different regional trade relations were centered around Western Europe. So practically there were already these regional trade relations, now just refocused. And in this case, many things happen. So first of all, yeah, this one is missing from here. Again, institutional changes can be sometimes be strange. So that was the era of chartered companies, which are one of the most dystopian approaches. So it started with the Dutch. So the Dutch realized that they should carve out their own share from the colonization, and obviously they did not want it. They were not able to interfere with Portuguese or Spanish navy. So that would, they tried, but they were not able to do that. So they got a charter to go to the Spice Islands and modern days Indonesia, and they were able to issue, so they created a company that was the first publicly traded company which issued shares on the Amsterdam Stock Exchange. They got this charter that they have monopoly for all the trade activities in this region. So practically they got half of the power. And just nice ambitions. And also they were buying some ships, and after that also they realized that obviously you are not able to micromanage everything from here if things are happening here. So this company got full privilege to do diplomacy, to maintain an army, to have legislation, to maintain their own court, and practically everything. So they were considered as the first sovereign company. So when you are combining profits, stability, and looking for profit with state features, then it was a recipe for disaster. At least the people, because otherwise the company was profitable for 2 centuries. So we can say it was bad from financial point of view. They were sometimes they were paying 20% of their shares as dividend, but on the other hand, oh my God. So slavery, genocide, it was on the menu on daily basis. So they did many nasty things. If you are checking VOC, then the internet is coming up with terrible things. So, Also, in case of institutional building, so absolutism was introduced in Western Europe. In Central and Eastern Europe, it was absolutely lagging behind in terms of economic power, and also Ottoman wars was devastating the region until the 1700s. So also 30 Years War destroyed most of Germany, so again 1/2 of the population was killed during these 30 years. So many nasty things happened again. And also mercantilism in foreign trade and monopolies were the ways how these absolute monarchies tried to maintain their economic power. So they realized that, okay, they cannot have enough money from taxation, so they started to sell away monopolies for trading this stuff, that, goods, and so on. So that's why during the next period, we can see that everybody hates monopolies and these things, so they are trying to move towards free trade, what we can see in the early economics. Yeah. So what we can see here in the case of British data set, in this case the GDP is this orange line, that I had to use already an exponential scale here. That even without industrial revolution, the economy was scaling up really fast. Also, at the same time, population was still growing at the same time, because now they did not have to use this really terrible low yield grains, or they were not relying on them completely, but they get potatoes, they get corn and rice and many other delicious things. Also, we can see this consumer price index rise, what I mentioned already, that it was happening for a century. That, okay, this was literally the case that if there is a change, structural change within the economy by focusing on completely different ways in terms of the industries, and also there is an inflow of precious metals, then obviously price levels will react on it. It doesn't matter if we have gold or silver or whatever. So if commodity is money, then this will happen. Also, coin in circulation, we can see that at least now it follows the trend line of the economic outputs. Okay, we can see that this is quite turbulent, but still the same exponential growth is happening in both cases. So we can see that exponential trend is happening here, there. So it's a linear line because I was scaling it as an exponential chart. So even we can have inflation within this environment with gold. Yeah, there are the chartered companies, so you can check all the things. What is really interesting that there is one chartered company or sovereign company which is still existing today. That's the Hudson Bay Company. So they were creating the foundation for modern day Canada. So if you are checking on the map where is Canada located, they had the same location. Practically, they had monopolies for all the trade, all the goods moving into modern day Canada and things moving out. And they were focusing on fur and beaver and small animals first. And in this case, they were not that nasty like all the other ones, because they needed the cooperation of native people to collect all these furs. So that's why not much genocides happen like in the United States of America at the same time with the local native population. So, yeah. But the company still exists today. Obviously, nowadays this is not a sovereign company, but this is still in the real estate business. So it's really strange that this is I think the sole one we survive. Otherwise, in the Atlantic trade, usually these companies defaulted really fast because they were always entangled into the wars of the European entities, and that's why they were not able to distinguish themselves. Yeah. So, in case of conclusion for the coinage era, we can see that so productivity can limit population. So until we cannot harvest more food with more advanced methods or with better crops, then we have an upper limit on the population. Also, population limits aggregate demand, and also the size of population centers, so how big cities can be built up, which will limit the industrial output as well. But if we are able to increase agricultural productivity, then obviously we can concentrate way more people in cities to increase our output. And also what we can see that once we have this, then monetization will increase automatically. So we need supplier credit, we need commercial loan, we will payment in advance, we will have merchant bankers, we will have short-term loans, long-term bonds, and commercial papers, so bonds issued by companies on the short run will be also present. And if we do this, then we can build up proper state. So it will widen the tax base. So which makes labor for still a scarce resource, and yeah, there were not much cases where we can't find slavery. Okay, there was serfdom in medieval Europe, but after the plague it was non-existent anymore in western part, which is absolutely good because if you're not slave, then it's good for yourself. But from macroeconomic point of view, it's always good because this makes labor force scarce, which makes a huge motivation to increase productivity in the industry and in the agriculture. So, yeah. Okay, so let's move into the gold standard era. So, we can see already that banks were growing, which means that their asset side were growing as well. So, some of their assets were invested into precious metals. So they started to realize that, okay, if we are buying precious metals, we can also issue bonds which are not expiring and which are not paying any interest, but you can transfer anytime to the gold or silver in our assets. So practically on the liability side, we can find banknotes. On the asset side, we can find gold and silver which were backing them. So without any central banks, we can do it. If we have atomized banking system, but still stable banking system. Next thing, what we have to understand in the case of first industrial revolution, that it's a revolution because in this case, that was the first time, at least in documented human history, so maybe it happened earlier, just we have no idea about it nowadays, that productivity was growing so fast that GDP per capita was also increasing. Which means that living standards were rising. Okay, if you are checking work conditions at this time period, so people, children are working in mines and things like that, we can say that that's the utopia, but if you are going through the whole time period, we can see that living conditions, even for ordinary people, was growing like never before. Also, many people were floating into the city because even if working conditions were terrible in factories, it was way better than working on the fields 24/7. So at least you had cover above your head. Also, steam engine. It was at the beginning it was used for just pumping out water from mines. Then after a century, metallurgy engineering and many other things developed enough that they started to use it for moving particles. So the first decades, so practically under the Napoleonic Wars, everybody was building channels, in inland channels, in Western Europe, in the British Island, and also in the United States. Because in this case, if you were building channels, you were able to move bulk goods inland, and you can move them way more efficient. But obviously, in this case, you need huge infrastructural projects, which meant that you have to concentrate a lot of capital, so that's why many publicly traded companies were established. Steam engine made this much simpler because if you can build smaller, reliable steam engines, you can build railroads as well. So that's why things changed a lot suddenly at the end of after the end of the first industrial revolution, when all this scaling up from the textile industry and practically also from metallurgy went completely on heavy industries and steel manufacturing and then machinery and all these other new industries. So revolution in logistics, we should never underestimate it, because this is how the inland part of the continent was explored in Europe. So, for example, Szeged, before the arrival of the railroad, had a population of 20,000 people. And after the arrival of railroad, even before the Great Flood, so in the 60s, it had a population of 60,000 people, which is not much, but it tripled. So we can understand that, yeah, it was really highly significant what is happening, because economies are starting to scale themselves up. And also population was increasing nicely, even without, this is still not a modern agriculture, because they were not using artificial fertilizers. Artificial fertilizers will be made at the end of this century. So we will reach that point, but already was way more modern than during the medieval period. Yeah. So in this case, we can see an upscaling trend. But for example, North America has this 2%. So this is whole Canada and the United States. This is whole Habsburg Empire, and this is not Russian, because that was Russia. So mostly Habsburg Empire and Poland, but the lack of Poland because it was already split to pieces. And still we can see that, okay, China, unfortunately in India there was a disastrous plague, and it was the mismanagement also of what the British made there as well, not just in Ireland. Yeah, so they were reaching the point where they needed some kind of a more sophisticated institutional environment. So that was the gold standard. So Bank of England was created a century earlier because French Navy kicked, so British Navy was losing against the French Navy in some battles at the end of the 1600s. So they needed a lot of money immediately. So they created the Bank of England, which was providing loan to the kingdom, to the state, and at the same time they were issuing bonds to collect the money. So practically it was just a development bank, if we are using modern standards. It was not a central bank. They get this monopoly only after the Napoleonic Wars. And in this case, they get all the monopoly. I mean, no banks were allowed to issue paper money or banknotes after this point. Also, they were fixing the value of the paper money or the banknote to the amount of gold reserves at the Bank of England. But it was not one-to-one. Okay, Ricardo tried this, but it was a disaster. So it was always a lower share. And practically during this whole time period, the relation between the banknotes and the gold reserves were always shrinking. So you were able to get a smaller and smaller percentage of the gold reserves if you had the same amount of money, because if the economy is growing exponentially, then the banknotes had to follow it also exponentially. And since we have now big banks, because you will have to concentrate a lot of savings to finance all this infrastructure and industrial endeavors, that's why the Bank of England became the lender of last resort for the banking system. So if banks needed liquidity support, then they were able to get it from the Bank of England at least. So practically, last resort lending was like a market making on the interbank market. So if nobody would like to make business with you under the set rules of collaterals, then you can get money from the Bank of England, or if you have excessive liquidity, you can put your money as a deposit to the Bank of England. But in this case, Bank of England was separated from lending to the general population. Only they were able to lend to the state, but also it was not that significant from their balance sheet. So it was stable and not growing, not growing level of lending. And yeah, and the problem was that it's really hard to harmonize the lender of last resort operation and the needs of the banking system, and also the gold fixed currency. So we can find many different papers where central bankers were complaining about this discrepancy, that it was an unsolvable issue. That what can you do? In many cases, they were mismanaging crisis situations because they had to maintain the gold standard, so they had no other choice. We can see also that, gold standard in the UK was introduced in 1842 or 4, but for example in the Habsburg Empire, so in the Austro-Hungarian Empire, at that time it was only introduced in 1872 or 3, so 3 decades later. Because at that time, before of that, people were using gold and silver parallelly, but the silver prices were dropping so much that that practically could not be used as a monetary instrument anymore. Yeah, so if you are checking the balance sheet, then unfortunately it's not gold. I need the color, but this blue area represents all the coin and bullion, so all the gold in the balance sheet of the central bank. This is the public debt, as I mentioned already, that still they were lending to the state, just at a limited amount. Also, they were purchasing government bonds, and also these are the loans to the to the commercial banks from the central bank. So we can see that they were lending already, and this is only the gold what we can see here. So it's not so much what people would expect from the central bank at the peak of the gold standard. Yeah, and these are short-term debt securities also purchased. So we can see that this asset structure is absolutely diversified. So later I will show you modern cases from continental Europe, and we can see that in many cases central banks can be absolutely foreign exchange reserve heavy, and sometimes we are not able to see their lending abilities at all, or lending activities at all, because what they are doing, that just they are keeping the foreign exchange reserves. So in this case, they were much more diverse. Okay, second industrial revolution, we can see, okay, that was another revolution in the case of manufacturing, in case of logistics. And in the case of France, they had issues because they did not have any kind of coal. So the reason why France is nowadays full of nuclear power plants is because they don't have domestic source for coal at all. Also, utilities were developed. You should check pictures about London before sewer system was built up and after. So yeah, it was essential if you are putting people together. And still balance sheet expansion for the banking system. It happened, and it also created many bubbles. So during the 1800s, there was a huge crisis in the 70s when many companies collapsed and they had to reconstruct their loans. Also, there was another big crisis after the millennia. In 1906 or 7, it reached even the US. That's why they started to make the US Federal Reserve, because until 1 year before the First World War, the US still not had their central bank. Still nowadays people are saying that the Fed is not a real central bank, but come on, it has all the operations. Yeah, so at the peak, what we can see here that if you are combining all the industrial output in Western Europe and also in North America, we can get this absolute monstrosity. And still, this is the Habsburg Empire, the mighty one. And this is Russia, and this is Latin America, this is China, this is India, and also this is Turkey. And this is total Africa. So we can see when people are talking about emerging economies that they are growing so fast, then come on, we are consolidating the world economy from this absolute asymmetric state. What was before the First World War. That obviously China or India should have way higher percentage from the output, global output, than these two levels. So, and also the rest of the world as well. So, yeah. Still, if we are looking on the trend lines, we can see that scaling up happens, even at more ridiculous speeds. And also we can see that consumer price indices are not growing as fast. So we cannot find such shocks like before, because due to productivity growth, there was always a disinflationary pressure on the economy because of the manufacturing things. And also we can see that coin production maybe is much more balanced than before, so we cannot see such upswings. Okay, great financial depression. So all the disasters. Obviously we will continue this next week as well, because it's way longer. So what can possibly go wrong? Many things. So first of all, during all the stupid people at the political elite in Europe and also in the US, they did their best during the First World War and even after. So my favorite was that in the US in 1928, they started to implement tariffs on import in the agriculture. So at that time, somehow they got this idea that they have to defend themselves against imported agricultural goods. Just the problem was that the US was an exporter in agriculture. So they had to defend themselves against something, but it was not agriculture. And obviously other countries tried to follow, because during First World War you were able to sell anything in Western Europe. For France and to Great Britain, because they were lacking food, they were lacking supplies and everything. So in Germany there were even famine during this time period, or also in Habsburg Empire and especially in Russia. So in this case, many countries in Latin America, in North America and elsewhere, they were scaling up their agricultural production because they had big markets where they were able to sell. And obviously the great idea was that all the biggest will be paid by Germans. So the question was how. Obviously they were not able to do that because practically their society not just collapsed, but also the economy collapsed as well. So there was a hyperinflation in the early 1920s in Germany. So France tried to occupy the Ruhr region. In this case, they were able to get some coal, but there were strikes, so they were not able to get anything. After that, they created the DOS plan, where they were creating bonds to securitize German war payments. But still, it was utterly useless. So they were coming back and forth with political and also financial solution until all these imbalances and also the lack of consolidation after the First World War collapsed into one single crisis. It had different impacts in continental Europe, it had different impacts in the US, but still the problem was that high unemployment was everywhere. And also deflation at the same time was also everywhere because the significant part of the aggregated demand collapsed. And also the problem was that central banks, which were still relatively young at this time period, so US Fed was created 1.5 decades before the Great Crisis. So they tried to rebuild the gold standard because we have to go back what was before the war. And it made the situation even worse because in this case, if money is connected to gold, then you don't have to keep anything. So people started to sell their investments because, oh my God, the stock market is already crashed. So if companies are defaulting again and again, then they can lose their revenues. So it's much better to hoard cash because this is a safe asset. So that was the first documented case of run to safety. That was the reason that during the New Deal, Roosevelt removed the gold reserve and practically, even if forbid to invest into gold, physical gold, so even the investor had to, at least households had to sell their gold back to the state, and practically this is how they pushed people and households into consumption. And also by buying riskier assets because they were forced not to buy safe assets. Also, that was a time when Keynesian monetary policy, Keynesian fiscal policy was created, which was really strange because Keynes was an investor. So he developed the first closed-end funds. He was a value-based investor, and he just made some speeches about what the state should do, what the government should do, and he was not a theoretical macroeconomist who was making equations or things like this. All the other people who were exploring his ideas, they were creating a coherent system from his economic ideas. But still, the idea was that, okay, if private aggregated demand collapses, then the states should step in. Because at that time, states were not indebted, at least in the US, unlike Germany, so they can do something. But unfortunately, this ended terribly with Second World War. So let's go through Bretton Woods. Or should we? No, let's stop here because this will be integral part of the story after. Okay, so that's all for today.